have Gurmeet Chadha, who's with us on the show right now, along with Naresh. Gurmeet, afternoon to you. And do you think that this sort of a fear in the market is purely based on valuations, or is just general fear that's gripped the market right now, and nobody wants to actually hold on to any positions?
No, there is definitely some panic, especially in the small mid cap, if you see the price action. A lot of the fall yesterday and including first half today was on lower volumes also. And I think a few statements also here and there by seasoned portfolio managers did really help the cause. So, but it's not that we've seen this for the first time. We don't question markets when they go up very sharply, when, small mid cap indices gave 40-50% return on a year-on-year basis. So I think so that's the nature of the beast. So if you see small cap index, that's gone down almost 20%, from the peak. So I think, but one only constructive thing here is that the lot of the risk right now are on the table, right? Whether it is related to tariffs, whether it is related to valuations, I think are becoming reasonable in large pockets of the market. I don't agree with the fact that everything is expensive. I think there's a lot of pockets where valuations are reasonable. Third, I think we probably need to watch out the dollar index and the currency movement. I think sharp appreciation in rupee also yesterday from 88 to almost in the morning. I saw 86 and a half. But I've also added to the FI sell-off because there's a bit of a currency play also in the near term which happens. But as I said, good investors actually take advantage of corrections. They don't take fear. So if your goals are long term, you don't have to watch this on a day-to-day basis and just stay focused on your overall financial plan.
Gurmeet, but that's when we are in the money and you had kept some powder dry, right? I think people have been so spoilt with the kind of gains that they've made within the small and mid caps that they're still sitting on hefty gains. It's just that it's halved from maybe just about 8 odd months back. I think the bigger question is, do you exit small and mid caps completely, protect your capital, and then selectively start buying now after the correction that's played out?
Don't think you are so good to time it, Aisha, most times, right? But as I said, has to be more milestone driven. So let's say you had allocated some money to small and mid caps, either through fund or stocks, and your financial goal is nearing, which is next 3 months from now, 6 months from now. Then obviously it makes sense to systematically, move into cash because your goals are approaching. But if it's long term, I really don't see much sense there. Secondly, as I said, there are a lot of pockets where the valuations are becoming attractive, and a lot of positive things also happen with the lag. So the rate cut, the tax cut in the budget, liquidity infusion by RBI, OMOs being done. And even if you see the rural, there are a lot of green shoots even in the rural recovery. So I heard M&M management talk about 15% growth in tractor sales this quarter. So I think the positive data points also will have a lag effect. And we should ask ourselves, is this problem structural or is it cyclical? I don't see India having a structural issue as far as it's not that, we are getting into recession and things are going to go loose. I think gradually growth has bottomed out. You gradually see improvement, but you have to be a little patient. So sometimes, it's just good to let's ride it out. Sometimes not doing anything is the best thing to do.
All right, sometimes not to do anything is the best thing to do, and we'll talk more about the markets after the short break. Welcome back. You're watching Closing Trades right here on ET. Now, if you look at the markets, yes, we are down and out, but nevertheless, very good recovery from the day's lowest point. 0.5% down to coming in for the Nifty. When you saw the sharp recovery actually creep into the markets, it was Nifty Bank that was actually lending the support to the benchmark indices. And Naresh, let me come to you and ask you, do you think that's the way how it's going to be, especially when you talk about the PSU banking name? Because if you look at the Nifty PSU bank sector, that's the one that's actually breached into the positive territory today.
So the Nifty PSU bank sector has already been correcting for quite some time. If you look at some of the smaller banks, they've already fallen 30-40% from the top. If you were to look at the PSU banking index itself, it had made a bottom around 64 to 6,500 on election day when the Nifty made a bottom of 21,300. Today it went sub 5,900, which is where it is equivalent to a 21,000 to 20,000 Nifty. So the index is itself corrected from 8,000 to 6,000 or lower. So it's already been a 25% correction here. So we could expect a pause, and State Bank of India has been holding on to the 720, 730 mark. So overall, looks like a pause here in the banking space, at least for now.
Right, so that's the take coming in on the PSU banking space. Coming to you, actually, Gurmeet, I wanted to get your sense, especially when you talk about these metal names, and especially the metal sector, given the fact that right now that entire space would be extremely volatile based on the news flows that you're actually getting with Trump tariff or what's exactly happening with the Chinese markets or even Chinese economy. How should one actually play this theme, and should one actually go ahead and play this theme?
So I think for us, it's basically a avoid, uh, you know, sorry. Sorry, my bad. For us, it's basically an avoid till the time these tariff issues are sorted. There's too much regulation on it. We do like some non-ferrous names like copper because that's an end use as far as energy demand is concerned. So we'll tactically look at some opportunities in terms of non-ferrous space, especially copper. But other than that, for time being, we'll avoid. In broader space, if I take commodities and building material, I think cement volumes have been very good. There's been recent update coming from a lot of players. There's some consolidation also happening. So, if you get good corrections in names like ACC or Ultratech, this may not be a bad time. The overall commentary as well as the overall volume uptake has been pretty solid as far as cement.
Right. Gurmeet, just wanted to understand where is it that you're recommending buying, other than, of course, the sectors that we just flagged off, like you just talked about cement and metals. Where else are you finding opportunities after the recent correction in the markets?
I think financials make a lot of sense. I think RBI stance, although officially may not have changed, but they really want to now balance growth, inflation, and liquidity. Because if liquidity is deficit, any transmission, either of lower rates or in terms of credit demand pickup, won't happen. They've also delayed the liquidity coverage guidelines by a year, which also had, if you strangulate banks more, eventually the credit demand suffers. I think initially there'll be minor compression in NIMs because the deposit rates won't come down immediately with the rate cut, but eventually the valuations are very reasonable. The entire bank nifty today is 13, 14 times earning, less than two books. Most of the banks are around book value. That is SBI, Axis Bank, Federal Bank in the mid cap bank space. So valuations are pretty reasonable in my view. That's the sweet spot of the index. We are looking at some consumption names which will get a boost with changes in the budget. We are looking at some names like Trend, large correction from the peak. We're looking at some travel and tourism names because that's where the momentum is pretty good. Whether it is hotels, airlines, some of the visa plays, etc. And we are adding some, space where it's beaten down more, but the order book visibility is there for next 3 years, 5 years, 7 years. Select names in defense. And bit of rotation maybe. I think even chemicals where the end use is consumer is best. So I think right now the market is offering you a lot of opportunities. And if you see, Aisha, now in the market, names which were not doing well, which is, for example, FMCG names, nobody was really looking at an HUL or a Tata Consumer. Nobody was really looking at chemicals. Some Bajaj Finance technically is a consumption play. It's a credit-driven consumption, retail consumption play. So markets are looking at pockets where valuations are more reasonable. And I think that's where probably you will see some rotation may happen.
Right, so that's some of the sectors there where you could see rotation actually come in, at least financials topping that list, and select consumption or defense name also looking pretty good given the fact that the flip that they've got actually from the budget. Kunal, let me come to you and get your view actually on the IT space because, I read some report a few months ago or rather a few days ago which said that the outperformance, the next level of outperformance would be led most likely by banks in the IT sector. Is that what the charts are reflecting by any chance?
Banks, yes, not sure
Okay.
for the IT because I think most of the large cap IT stocks are actually seeing correction. So there was a point where mid cap IT stocks, they did exceptionally well in 2024. In fact, start of 2025, early, I think just few weeks of 2025, we saw names like Coforge and Persistent, etc. These were few names which had done exceptionally well. But even these stocks have started to show signs of a correction. Now, when you see a sector outperforming and mid cap stocks outperforming by a huge margin, large cap stocks being a lot more divergent, then you expect that in the heat of the market corrections, these are the stocks which could probably underperform. So, and even the Nifty IT index as such, we've come back into a point where the Nifty IT index is retesting the lows of 41,500, 41,600 mark for the third or the fourth time in the last 1.5 odd month. So that again indicates that it's retesting the lows time and again over a short-term basis, which means we could be looking at the IT index going through maybe one more round of pressure or a correction.
Okay, let's get in some closing strategies on that note. Before that, Gurmeet, we'll let you go. Thanks as always for making time and speaking with us.